Good morning. I'm Tim Winter, Portfolio Manager and Utility Analyst at Gabelli Funds. Our next company was recently rebranded from SJW Group to H2O America. This is to reflect its growth from San Jose Water to a national water and wastewater company. H2O trades on the NASDAQ under the ticker HTO. It is the third largest publicly traded water utility in the U.S. The company serves 1.6 million people through San Jose Water Company, Connecticut Water Service, the Maine Water Company, and the Texas Water Company. H2O plans to invest $2 billion and over $2 billion in capital over the next 5 years, including $300 million to address PFAS standards. The company has the size, scale, and expertise to deal with PFAS and other standards. With us today is Connecticut Water Service President and CEO, Craig Patla, and Vice President of Regulatory Affairs, Troy Dixon. Mr. Patla started his career at Connecticut Water Service in 1990 as a field engineer working on drinking water infrastructure. Over the years, he's held positions of increasing responsibility, and since 2023 has served as President and CEO. Mr. Dixon, as Vice President in Regulatory Affairs of Connecticut Water since 2020. He's held similar roles at Eversource and Aquarian also in Connecticut. And before I start, Craig, I just want to say, of all the progressive and confusing names that utilities have rebranded over the years, which NextEra Energy, Eversource, Entergy, Ameren, thanks for coming up with a name we can all identify with.
I agree with you wholeheartedly and had a pretty good role in establishing that as water being very elemental. H2O seemed to fit, and we like it.
On that note, if you could just to start off, spend a couple of minutes talking about or discussing the evolution of SJW to HTO and where you guys are positioned as a national company today.
Yeah, sure thing. Well, as Tim mentioned, I've been with Connecticut Water now for 35 years, and I'm living proof that if you stick around long enough, they put you in charge. And you know, we in Connecticut, we serve about 107,000 or so customers. We've got about 245 employees. We have an awful lot of fun taking on the challenges in the water industry, and of which today there are more than ever before. And I can get into that a little later. But we came together with the San Jose Water Group back in 2019. It was, at the time, San Jose Water together with Texas Water, and we were Connecticut Water Service together, which included Connecticut Water Company and Maine Water Company. Now, as a combined entity now, San Jose Water currently about 57% of our company from a customer stance. Connecticut Water is 27%. Texas and Maine are 9 and 7 respectively. So that is our footprint today, but it may not be the footprint tomorrow. We were constantly looking to expand and improve, and that's our model.
Can you talk a little bit about how the company and you view the PFAS standards, overly onerous, manageable, and where your company has exposure?
Yeah, sure. So back in 2020, PFAS became the awareness of PFAS really spiked, and maybe that was 2019. And what ended up happening was states started adopting their own state standards for maximum contaminant levels. It was very politically driven at the time. The politics of PFAS standards got in front of the science. And to our state's credit, we waited for the science to catch up and to provide real data on what the harmful effects were to humans. Now, as a purveyor of water, I don't have the luxury of saying whether or not I agree with the standard. We adhere to the standard. And as the rule was promulgated in 2024, April of 2024, we went to work on establishing just what our footprint of PFAS contamination was. Lo and behold, surprise, Connecticut, you have PFAS, and we have a lot of it. We have Connecticut Water has 72 separate systems, 41 of which have some degree of PFAS contamination in it. Maine has one system that has PFAS, but that is a sale for resale situation, and California, San Jose specifically, has 2 sources of supply with PFAS contamination. So as you could see, Connecticut is bearing the lion's share of PFAS contamination, and we are headlong into taking it on, establishing a plan to address it, and meeting the standard as originally contemplated as April of 2029.
And what about the other states, Maine, Texas?
So as a result of the rule, we were all required to sample all of our sources of supply. We had already sampled our sources of supply starting in 2020 in partnership with our Department of Health, which is our health primacy agency in Connecticut. It was at that point where we determined the level and the expanse of contamination that existed. Of course, we didn't have a standard, but we knew where we had it. Maine only has one system. It's in Oakland, Maine. They purchase all of their water from a neighboring community, and that community has PFAS. They are charged with coming up with a solution for treatment there. And Texas has sampled all of its sources of supply. Its main source of supply in Texas is surface water, and it does not have PFAS in it. So what we have found is, generally speaking, for our footprint, PFAS is generally located in the groundwater supplies, as was displayed on an earlier slide. How PFAS gets into water, it is primarily in our situations in the groundwater.
So what are the solutions, and how are you implementing them, and what is the time frame for compliance?
Well, we have currently, for the 41 different contamination sites, we have, that represents an active, 27 active projects to remediate the PFAS known. Now, we've heard about granular activated carbon. Check, we have that in design phase. We've heard about ion exchange. Check, we have that. We actually were treating PFAS before PFAS was even known in one of our smaller systems. We were doing ion exchange to remove uranium, found that this particular site had the highest concentration of PFAS in the state of Connecticut, but we were treating it, just not knowing it, to zero at this particular site. So we are, like I said, we have 27 separate projects moving forward in various stages of design, and we are barreling towards the 2029 compliance date. I know we've heard that there's going to be an extension of that to 2031. And that's only for PFOA and PFOS. The balance of the contemplated regulated PFAS are the thought today is that the EPA administration will not regulate those and put those 4 PFAS compounds through the normal safe drinking water testing regime to determine actual MCLs for those not yet regulated compounds.
So maybe I'll open this up. Next question for the both of you. You're investing a lot of money in equipment. I think $190 million in Connecticut, $300 million total. Number one, what prevents entities from suing Connecticut Water and your other entities? Number two, how do you fund all of this? I know you're excited about some things happening in Connecticut, and how do you deal with the public on all of this?
Well, lawsuits are part of this. We are both the plaintiff in the class action suit against the producers, the manufacturers. As was mentioned earlier, we have received funds for the contamination that we're experiencing, and as well, we are the defendants in a class action suit of customers for what's basically a product liability suit that is making its way through the court system now. When it comes to hazardous materials, the ultimate responsible party is the producer, the manufacturer. So this is the suit where we are the defendant. We view it as frivolous and a money grab, but we are having to go through the process. And then where we are the plaintiff and receiving funds, I'll let Troy take you through what we are doing with proceeds.
Yeah, in terms of the funding, aspect of all this, we did hear that there are funds coming through these class action settlements, and we have received some funds to date. But the lion's share of the investment that we have to make is going to come through the same way we'd invest, or the same way we'd fund the other investments in our system, combination of debt and equity. We carry a 53% equity structure, and we'll maintain that or even grow it through these additional investments.
And the Connecticut Water Quality Treatment Adjustment Clause, can you talk a little bit about that?
Yeah, I think there are a couple things to consider as we sort of went down that road. I think first, this represents a significant level of expenditures for us on top of an already pretty robust capital plan. Add to that the Connecticut regulatory environment, which it's known for having a fair amount of regulatory lag. The distance between when we incur these costs and when we receive recovery could be a couple of years. So when you add this level of investment to that, it becomes a bit problematic. And then third, not to be forgotten, is that there could be a significant one-time impact to our customers as a result of this, what we want to take into consideration. So I think as we weighed all of that, probably about a year or so ago, we sat down with the Connecticut Public Utilities Regulatory Authority, our regulator, our consumer advocate in the Consumer Counsel's office, and then lots of the legislators in the area, and we set out to draft some legislation that would, one, allow us to recover these costs on a much more timely basis. So it established a surcharge that we can put on customers' bills on an annual basis, and that surcharge is tied to investment. It didn't mean these projects had to be completed and in service, which is usually the test for recovery. That took into consideration the fact that a lot of these projects are multi-year, and we didn't want to have to wait to start recovering those funds. But there was a lot of support for this. It was a very collaborative process with our regulators, and this legislation passed and was signed by the governor on July 1st. And since that time, we've been working on an implementation docket with the regulator to put this in place so that we'll probably start seeing our first surcharge to customers in the first quarter of next year.
So you get a rate increase to recover and earn a return on your investment in PFAS prior to even completing the project.
Yeah, that's correct. And that's, helps us recover the funds, but it also helps mitigate the customer impacts along the way.
So that brings me to a bigger picture question. As somebody who spends a lot of time covering electric, gas, water utilities, Connecticut has, become a very onerous regulatory environment. How do you view them, treating the treatment of water utilities versus, say, electric utilities?
Well, I think first I'd point to what we just spoke of. This water quality and treatment adjustment was such a collaborative process. And we've experienced that in other forms as well, with some of the performance metrics that came through in our last rate proceeding that really gave us the chance to recover costs that we usually don't. But if I step back a little bit, I think historically there has been a gap. I think we've seen in the electric and gas industries different mechanisms and opportunities that didn't necessarily make their way to the water sector. But I think what we're seeing now is a little bit of a leveling of that playing field. some opportunities coming our way through some things like performance metrics and performance-based regulation. And we're seeing on the gas and electric side, it's getting a little bit harder for them to take advantage of some of those things. So I think things have changed drastically over the last several years.
To be clear, the regulatory reputation in Connecticut is well earned, but we are navigating it well. And I think, as Troy mentioned, the adoption and the collaboration around the drafting of the WQTA, in addition to our infrastructure replacement surcharge, WICA, we are going one way with getting what we call riders or trackers on our rates in form of surcharge, while the commission is really trying to unwind those of the electrics and gas that they've enjoyed for so long, which allowed them to earn more of their allowed ROEs. So I think it speaks to the reputation of Connecticut Water, how we've demonstrated ourselves as purveyors of water, and the capital intensity of water, which, if you're doing it right, is the most capital intensive of the utilities. And we stand at a very unique time in our industry, not since the adoption of the Safe Drinking Water Act, than today, where we have basically 3 prongs that will really inform the capital intensity of the water industry. We're here today to talk about emerging contaminants, and specifically PFAS. Well, there are others, and our ability to measure contaminants now at parts per trillion, others are coming. There are additional 21 PFAS compounds that are under examination right now for potential regulation. So emerging contaminants, infrastructure needs. The water industry continues to receive a grade of D from the American Society of Civil Engineers for its infrastructure and its dedication to infrastructure. Well earned. But in the private space, the investor-owned water utility space, we are getting at it at a 1% replacement rate on pipeline, which is top of class. And we are enjoying a surcharge mechanism in Connecticut that allows us to do that aggressively, which is the right thing to do, and recover those costs more prudently to, again, reduce regulatory lag on capital expenditure. And then climate change. You know, the 3 prongs right there. Climate change has never more been in our face than now. Whether you agree with who's causing it or not, you cannot argue that it's happening. And it's either in the form of the severity of storms that we see or in prolonged droughts, which we see across our footprint. So those 3 prongs are providing a very unique time in the water industry for capital investment.
So that brings me to the next question on potential consolidation. We heard the last speaker mention challenges getting carbon in equipment, the expertise, the capital intensity. Are you seeing any movement towards the municipalities turning over to companies like you to sell, or other partnerships?
I think you are spot on in that it's inevitable. Now, I think municipalities are coming to the realization that they are just not nimble enough to meet the proposed rules as stated. The extension from 2029 to 2031. That's in large part due to supply chain, but it's also due to municipalities unable to determine what they have, how to treat it, how to procure the necessary equipment to treat it, and meet those timelines. And as well raise the necessary capital to treat that. They are just not as nimble to be able to do it as investor-owned utilities are. And listen, the investor-owned utility model works and is prepared to take on those 3 challenges that I just mentioned. The municipals have fallen behind in that, even in their water main replacement programs. Their other municipal utilities in Connecticut are replacing water main at a pace of every 450 years or so. Well, I'd ask the question, how much main did you replace this year that was 450 years old? Well, the answer to that question is none, of course. So as we replace 1% of our pipe and municipals replace 0.23% of their pipe, you know, that math just doesn't hunt. And the investor-owned utility model is set to take on these three challenges and to put equity to work to the benefit of the consumer.
So also on the priority list, lead, copper, Flint, Michigan, service lines. What is the industry? What are you guys doing to address that? You know, maybe you want to talk about your linebacker program, or you know, what is the long-term solution to addressing, you know, lead in the service lines?
Hey, the long-term solution, no secret, get the lead out. You have to. You know, we consider ourselves public health agents, and we are. We're the only utility that's consumed, and that's a high order. Lead in water is dangerous. It has dangerous health effects for all that consume. So we are in the process of adherence to the revised lead and copper rule that was put forward in large part due to the travesty of Flint, Michigan. But you know, it's going to be exhaustive and intense, again, capital intensive, because you have to investigate each and every service line that you have. I mentioned earlier we have 107,000. Well, we'd like to think that our records are spot on, but a lot of these records were developed in the early 1900s, and maybe lead wasn't called lead, or maybe the handwriting's ineligible. Maybe the record, maybe there are no records. That's what we're finding the most of. In the Northeast, we live in the oldest part of the country, has the oldest infrastructure, has the oldest record keeping, a lot of which is not necessarily accurate. So how do you address the issue? Well, you have to dig up each and every service line and replace them if found to be lead. And that's our order. That is our task, and that will be our pursuit going forward. Again, another health-based, very capital-intensive aspect of water quality and drinking water specifically.
We have a few minutes left. Are there any questions from the audience? I see one back there.
What shields the shareholder from potential liability from waterborne contamination if you get sued by some family whose kid grew another head because he drank the water out of your service lines? Do they sue you, and then you have insurance for that?
We do. We have insurance for that. The shareholder, how do we shield the shareholder?
I just want to understand your liability, which would translate to whatever the shareholder is.
Yeah, you know, we are responsible for delivering safe, potable water, and when we are delivering water that does not meet standard, we should be held liable. In the case that I mentioned earlier, where we are being sued, we're delivering water that's safe. You know, it meets the standard. Okay. In fact, one of the plaintiffs in that case isn't even a customer of ours, and is part of the party. Actually, 2 of the 3 are not even customers of ours. So it just goes to the frivolousness and the opportunistic idea of, hey, there's a contaminant out there. Let's see how much we can get to stick to the wall and see if we can't get some funds flowing our way.
Greg, just to hitchhike on your service line, you gave a lot of details on PFAS. Do you have any data on how bad the lead in the service line is for municipalities in Connecticut or other areas? Or is it primarily a northeastern challenge as opposed to California or Texas or Maine? Or
you know, if you look at a heat map of the location of heat of where these lead services are, they are primarily located in either the big cities or the Northeast. You do see a lot of lead service lines in that area. Now, there's not a distinction necessarily between municipally owned or or investor-owned utilities. At one point, before we knew any better, lead was a pretty good material to use. It was malleable. You could bend it around corners. You didn't have to make joints with it, and it worked. Like a lot of things, like Teflon pans. All of a sudden, you find out, oh boy, it's not really good for you, though.
Yeah, is the price to replace in the number that we tossed around was 7 to 10 million homes have lead in their service lines in the United States. And the cost to replace it, is it being amortized by the state, allowing you to, how does a recovery occur when it's like 7 to 10,000 a line, or whatever the number is?
Yeah, right now, we are, and as a result of our last rate case, we are still very much in discovery mode with how to recover the costs associated with it. There's a bit of a complexity there, because a lot of the water service that we would be replacing ultimately would continue to be owned by the customer. So how do you unwind the complexities associated with that? Lead is, addressing lead in the service lines is a complex issue on its own, because we can reduce every lead service in the whole country, and the reality of it is you're still going to have lead solder joints in the homes. So this is the first tranche of what's likely to be many, like PFAS, that is going to require someone to take an action to better the health component of our citizens.
Just the last one on PFAS. Do you have a bias towards granular activated, or what your other options are?
Honestly, our systems range in size, and I've found the granular activated carbon very suitable for what's called long chain PFAS. And it's a design standard for our more large applications. Our smaller applications, we're able to get the ion exchange units in contained cylinders and just exchange them with the provider there. So it's better to use the ion exchange in our smaller producing systems.
The panel alluded to emerging contaminants. Currently, how often are these reported and investigated on?
The EPA conducts what's called an unregulated contaminant rule investigation every so many years. We're currently under what's called, and it's an acronym, UCMR, and we're currently under UCMR 5. And what they do is they put forward a number of contaminants for all water providers to sample for in their systems. Well, under the current UCMR 5, we are investigating an additional 21 PFAS compounds in addition to other potential contaminants. And when they get the results of that testing, they will continue the science on what if they want to establish a maximum contaminant level, which will be a health-based regulation.
I think we're out of time, Craig and Troy. Thank you very much.
Tony Bancroft and Timothy Winter, CFA, are portfolio managers. Wayne Pinsent, CFA, is Director of Research and Research Analyst, and Rosemary Morbelli, CFA, and Dr. Rebecca Stern, PhD, are Research Analysts at Gabelli Funds. The above webcast is a recording from the 3rd Annual PFAS Symposium, which occurred on September 17, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of June 30, 2025, affiliates of GAMCO Investors Incorporated beneficially owned 1.1% of Minerals Technologies and less than 1% of all other companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800 Gabelli 800 422 3554 914 5100 fax 914 921 5118 info@gabelli.com